This is not financial advice. I'm not a financial advisor. You know the deal. All right. I'm going to be doing a little review of yesterday. Okay. And I know this is all hindsight, but it's gonna help you learn one way or another. And I did call 4 plays live time in my Discord, 4 to 4 for the free Discord. So, which is pretty nice. So yesterday going into the day, okay, I was bearish. Okay. And I was only bearish until we hit this low, okay? And once we hit this low, I was actually done trading for the day. Okay, once we hit this low, I was like, okay, I'm good for the day. We hit the low, all set. And I peeped a little bit the rest of the day, and we got a nice long, which I did take. And I wasn't on Discord at the time, but I did take the long, okay? So going into the market open, right? This is my target. And something you can do is if you want to go in with no bias, right? If you want to go in with no bias, what I recommend doing is marking like the last, I don't even know, I would say 15-minute high and low, so something like this. And what you want to do is mark both the 15-minute high and 15-minute low. And what you want to do is go in with no bias and wait for one of these highs and lows to be swept, and then look for the opposite setup. So yesterday, what happened was we actually swept the high of the previous day. Okay, and then we went back down, we swept the low. Okay, so it would have given you an opportunity to short and long. Okay, and I don't actually think there was a short setup after we swept the high. Was there? There was somewhat of a short setup here. Not the cleanest in my opinion. But there was a textbook long. So once we swept this low, okay, you can see what do we have in the 15-minute. We have a inverse fair value gap, right? I know some people think this is a BPR. It's not a BPR. So you have the inverse fair value gap with the lined up with the bullish fair value gap. I'll just call it a BPR because that's what people think it is. BPR, double fair value gap, whatever. Okay, it's still very effective setup. And then what do you also notice? Okay, if we draw a premium discount from the low to this high, okay, this is in discount. Okay, and this is also the manipulation leg. Okay, because this was. Okay, this leg to here was the manipulation leg, okay, because it's we hit the low and then we got the market structure sit after. So if you use any standard deviations, okay, you would use this manipulation leg to draw the standard deviations, which I do not do. Okay, but anyways, you can see how textbook this was. Okay, we had a fair value gap right in discount as here. Okay, and we also had just the 15-minute, the V-shape recovery setup, okay, and I love the setup with the double fair value gap, okay, it's very, very nice. And a lot of people have been asking me, how do you hold longer? And if you're in a funded account, I would really recommend being most out at this high. And the reason why I say that is because, like yesterday, a lot of people asked me, well, how do you know to hold till this high or something? And on a funded account, you really don't. That's why I say you should take the low-hanging fruit, and this is like a 10-point move anyways. And a lot of people don't understand that on a funded account, if with a trailing stop, okay, if you somehow hold half a position, we go here and we never hit the take profit and go back down, okay, your trailing stop loss is going to be wrecked, okay? And it's just, I think if you're on a funded, don't hold for the home run. Maybe try holding one runner, but I think that if you're on a funded, hold to the low hanging fruit. If you're on like a personal account, okay, or an account with end of day trailing drawdown, okay, not the actual trailing stop, I think it's okay to leave more of a position up for this high just in case. But for those asking, oh, how do you hold to the home runs, right? If you don't have a trailing stop, then as soon as we hit the internal high right here, just put your stop at break even for the other half position. Okay, you don't even have to sell any of your position here. If you really think we're hitting the highs, you don't have to sell here. But I think it's just good if you have a trailing stop loss account. And what you can do is now we hit this, you put your stop break even, it's a free trade anyways. Also, this would have been a really nice long, but we never hit it, unfortunately, which it is what it is. Okay, it also lined up with this inversion for value cap as well. So this would have been a nice long, never got it. Okay, the only other nice setup I saw was, see how much displacement we sweep this buy side with? This displacement here tells me there's probably buy side higher than this. Okay, when I see a candle like this, there's probably buy side higher, and sure enough, if you look to the left, there was a unbalanced high, or unbalanced 1 hour fair value gap up here. Okay, so I love looking for these unbalanced fair value gaps. So this was completely unbalanced. We had a high right before this, we had a high right after this, and because of the momentum candle we got over the because of the momentum candle we got right here, that kind of tells you, okay, we swept this buy side, but when you see this candle with a fair value gap created, it's probably likely to seek price higher. Okay, so you want to zoom out the higher time frame, go to a higher time frame, see if there's any like buy side that's higher than this. So that's another kind of tip. And then there's also this confirmation setup right here. Okay, there's this inversion fair value gap, but this was too close to the end of the day to really take. But you can see we never got to close under it. And time and price is important, because this was not respected after the market closed. This probably would have been respected. We probably would have hit this high if this was. This is why time and price is very important, okay? And this is just price action, low volume, okay? We finally get the pump off of NFP to this high. But yeah, this is why time and price is important, because this is just not respected at all after the market closes. So again, you want to be trading when the market's open. After 4 is very, very risky. But yeah, so this is a little review of yesterday. Hope you guys enjoyed. Have a great weekend. Probably no videos tomorrow for Easter. But hope you guys enjoy the weekend. Peace out.